So here is a day trading Fibonacci retracement strategy that you could have implemented today. So using the Fibonacci retracement tool. So with the Fibonacci's, I have it down here. So this was Tuesday, February 13th, right when the CPI data came out. Okay, so what we could have done is taken the swing high, taking it all the way to the swing low. Now, I typically do not trade when the news comes out, so I would not have traded anywhere around this area or this area. Now, if you do trade, now you could have, for example, let me just change the color here. Just red to just gives myself, it just tells me that, we're going short, potentially going short as the trend has been going downwards. So I just put it red for downtrend and then green for uptrend. So what you could have done here is, okay, taking a swing high to a swing low, and then as you could have seen right on the market open, you could have gone long here, right where it hit the 23 retracement level, 23.6 retracement level. So you can see here, this was a nice rejection candlestick, and it's kept right underneath the 90 MA. So you could have, for example, let's say you would have waited until this candlestick finished. And you could have put your stop loss right up here. It's a 6-point stop loss right there. And if you were to gone like a 2-to-1 risk to reward, you could have gotten a very nice trade there as it continued to go downwards right at the market open. Now, I typically personally do not trade the first 15 minutes of the market open. So I try and wait and see how the market is doing the first 30 minutes or so. So I would not have taken this trade personally, but this would have been a good trade. Obviously, you just don't want to enter right when it hits that Fibonacci level retracement. You do want to wait. So this was for more confirmation. So you could have seen this here, this bearish candlestick. And then here, even if you waited a bit, you could have seen the rejection on the 90 MA and then continue going downwards. So that would have been a nice trade. Now, a trade that I actually was looking at and almost put a trigger for, but I was too focused on NQ. Just kept the same anchor here, the same swing high, and just moved the swing low to the low of the day. Okay, so here, obviously this was a very bullish uptrend right here. So with these 3 consecutive candles, so I would not have entered here, even though here it kind of gave us like a potential entry there. But what I would have preferred and what I was looking at is to wait until the 38.20% retracement level, and the 50 and the 61. This is where we start to get into the golden zone. In the 38%, if the trend is strong, so typically, like if the trend is very, very strong, it will bounce off the 23% and it'll continue going lower. If it bounces off the 38%, it's still a very strong downtrend. And down the 50%, that's when the bears will really try and step up their game and really try and push the price down. And the 61%, that's really their last hope, that's why it's called the golden zone. But here, focusing on the 38%, as you can see here, it started to stall right at the 38%. So what I was looking at here is a potential short. Now, obviously, you don't want to just blindly go short once you start to see some resistance here. What you can do is also like put some more price action. So here, I would have seen this wedge here, how it broke down, and then we saw this huge candlestick here go downward with some more volume than the previous candles. That's another form of confirmation. Another thing you can see in VWAP here. So obviously, even though we broke out of VWAP, we didn't hold above it. So that's another side And then below the 9 EMA as well, it was starting to get compressed, and it finally broke down. So that was another sign. So what I was looking to do is go short and then put my, I usually put like a 5-point stop loss or more, just depending on how it is, how the volatility is. But in this trade, I mean, I would have been in the trade quite a long time. But I mean, if you would have done a 2-to-1 risk to reward, you could have gone 10 points out of ES right there. Now I would have traded the micros for this one, so I would have let the trade, breathe a little bit more. So I would have actually taken it to the low day. So I would have been in the trade for quite a long time. But if we would have aimed for like a 3 or to low day, that's like a 4R. But we would have been almost 2 hours in the trade. Okay. Now, typically the rule of thumb, this is what I learned from my mentor, is that once we have a strong drop or a strong pop, but in this case drop, and we come off 38% retracement, typically the profit target is the negative 23% level. So that's like the profit target. So if you would have managed it throughout the entire trade and you were willing to be in the trade for several hours, you would have gotten a lot more. So, and I mean, you could have, continue to hold on to the trade. I typically, if the trade stays below the 9 EMA, I would have stayed longer. So we could have, I mean, yeah, typically it's the profit target, the negative 23%, but obviously you're never going to get it exactly. I mean, technically, if you would have stayed in the trade even after this little pop, it would have gotten it. But I personally would not have stayed that long because we gotten close here to this 49.50 level. So that's a psychological level. So I mark these because those are psychological levels and they tend to act as support and resistance. But in this scenario, we would have gotten, at least a 6R. So that is 32 points there. Okay. You could have used some other confluence. I'll use Bookmap for some order flow. I'll also look at an NQ just to make sure there's confluence there. But another thing that I look at is the MACD. So here, obviously, we look at here, we could have seen that the momentum starts to drop. Now, I know there are some traders that look at, okay, if it crosses the lines, then you go short. I personally do not use the MACD like that. I just use it to kind of look at momentum and see if it's drying up or if it's, ready to converge. So if I would have entered here, then obviously we could have seen that, okay, it's starting to go down. The MACD momentum starting to go down. And then here, obviously, even though here started to go upwards, I mean, it wasn't enough to get off the trade, especially if your stop loss was right above here. But as you can see, it continued to go downwards. So this is how you can use the Fibonacci retracement tool to, if there's a strong trend. This is one of my favorite things to look at. And that would have been a very good trade. But on another video, I'll go over my trade that I actually took on NQ. But yeah, I just wanted to go over this as a trade idea. You can use this Fibonacci whenever you want to get in on a reversal. So here would have been a very nice trade on a reversal. And again, don't just go in whenever the price hits that level. You want to see some other types of confluence. Like in my case, I saw this price action making higher highs or higher lows. We were making higher lows, and then we broke that with some good volume. below the 9 EMA, and we were below the VWAP, so we rejected the VWAP, and then we just continued on downwards. And then we saw the MACD as well. So, yeah, this is a trade idea that I just wanted to go over. It's a good strategy whenever this tends to work well whenever there's a huge drop or there's like a huge trend forming. So in this case, CPI data came out that was higher than expected, and that caused a drop. And I usually like to wait a little bit until the market opens to draw my lines and start considering a trade. Another thing that you could have considered here is see how it dropped here in the first 5 minutes, and then bulls started to try and make a reversal, but they failed, so they came down. This could have also acted as resistance right here. I would have changed the color. In real time, I was not, I didn't see this potential supply zone here. I was just looking at the retracement level and everything else I went over. But this could have added more confluence to the trade. Okay, so that's all I wanted to go over, and I hope this helps give you some more trading strategies.